Welcome back, everyone. It's your boy TB here at SMB Trading. Coming back at you with a nice little market update video today. Today we had more red, just more red, more selling today. Things looking incredibly bearish at the moment. We have the Nasdaq down about 1.5%, leading the market down. Apple completely not capitulating, but completely ripping through its floor. As we speak this very moment. No, but today it has been the S&P down about 1%. If we look at Apple, it was down about 1.5%. And look at Apple. Apple is just, it is falling. It is shooting right now straight for 122, straight for maybe 118 area. Apple is looking rough, and when Apple goes down, that's what I've been saying forever. I've been saying this recession, this bear cycle does not end until we see Apple bottom, until we see people panic selling Apple, like people have been panic selling Tesla, people have panic sold Meta, people have panic sold like Netflix and even Google and Amazon. We're not going to see a bottom until Apple gets that move, and it just has not. Apple is held up so strong. But hey, I don't want to be a broken record, but I've been saying this is why you gotta subscribe. I was telling you guys after that CPI report, watch out, man. Something ain't right. When we had that CPI day, I told y'all, I said something ain't right. We just got the best inflation news you could imagine, and we just sold off all day. What is up with that? And then FOMC day, boom, Powell comes out, says 5% rates for about a year. You guys are, you bills are fucked, is what he came out and said. And sure enough, things have just been coming down. Things have been looking very bearish. And now we are starting to see a lot of selling in the tech sector. Tech is leading the market down. It's been the story of the year. Tech has just been the weakest thing ever. These crazy, insane market caps that these tech companies still have. Like Nvidia is still holding like a 60 forward P&E. Tesla is still up there in the 50s, I believe. I mean, we are still just so insanely overvalued in some of these companies. And we're just seeing complete capitulation, not panic selling, but like just everyone selling everything. Everyone just wants cash. Bond markets are selling off. We had bond yields rise today. The U.S. 10-year up about, up about 10%. Oh, it just reset. Yeah, up about 3% on the U.S. 10-year. We're breaking out of this little falling wedge on the U.S. 10-year. Watch out for that, man. That could get scary. If we see bonds come back above 4%, a little scary. So this is kind of what I've been talking about for a while now. I've been saying we've been getting these rallies. So this has been another confirmed fake out bull trap rally that has just sold off instantly. I mean, we have seen the S&P come straight from 4,100, and now we closed right above 3,800. I mean, that is like a 10% drop over about 5 days on the S&P. And this goes back to what I was saying about these rallies are all based on hope. They are all FOMO, panic buying rallies where they're getting this news about CPI. They get news that CPI is coming down a little bit, so hope rises. People are like all-time hopeful. Things look good. It's just like so much like group thing. Everyone's just like, wow, the market's going up. Things are looking better. Unemployment's not going up. Maybe we won't get a recession. Maybe I should buy. I've been sitting on cash for like 10 months. It's probably time I buy. I think the market probably bottomed. And then what happens? The facts come back in. These rallies, they don't care about the facts. They don't care that inflation's still high. They don't care that the Fed funds rate is still high. It's just about the hope. And everyone loves to get hopeful, especially in the middle of a year that has just been nothing but pain. But that is why you wait and see. You patient. Stocks are the patient taking money from the impatient. And sure enough, we waited. What's the market do? It sells off. We get another painful rally. I mean, another just monster rally that has completely flipped us on our heads, and now we are selling back off. This is about the third one this year. Just a horrible, painful FOMO rally where you're worried that the market has bottomed and you missed it, but turns out if you didn't buy, you're smart because it looks like things are still going to get cheaper by probably about February or March. So let's talk about that. Let's talk about the Fed. They are, unfortunately, if you want to talk about stocks in 2022, you gotta talk about the Fed. They've just been everything. We know inflation is part of the formula. It's part of the recipe in the shit stew that we've all been eating. And we all think if we can get that shit out of our stew, maybe the market can go back up. But that's not the story. The story is what the Fed does in response to inflation. So we got that good CPI report. We've had like 2 good CPI reports in a row, leading us the hopeful bulls, leading them to believe that hey, inflation's dead. The Fed's going to cut rates. What do they come out and do? FOMC Day. They lay out the facts. They say, hey, we did this back in the 80s. We did this back in the 80s. We had inflation come down. We cut rates thinking we got inflation down. And what did it do? It just went straight back up. It just went straight back up. We've done this. We don't want to do this again. We are going to stay tight. We are going to keep you depressed, because if you get too excited and everyone gets so excited again like we were in 2021, then inflation's just going to go right back to where it was. And they don't want to do that. They don't want to do that because that was super duper painful. They were jacking rates up 300 basis points a meeting back in the 80s. Things were so crazy back in the 80s. They don't want to do that. And these are the facts. So just remember that. Market FOMO rallies on hope, emotion. That's purely emotion. Purely emotion when the market rallies, because everyone's so scared they're missing out. And then what happens when things go down? Oh no. It's not emotion. It's facts. Here are the facts. Inflation is still high. Fed funds rate is still high and can be higher than we thought it would be. Unemployment is not moving. So that's another big thing that the Fed talked about this last FOMC meeting, is that the labor market is still tight. It's still insanely tight. There are still not enough people to fill jobs. They have tightened so aggressively, and unemployment has ticked up, like maybe 0.5%, if that. I don't even think it's gone up that much. I mean, it's just crazy. They're jacking rates up so high, but the labor market is just not moving. And that's because, and Powell said this himself, he said, over these past 2 years, employers are so screwed when it came to finding new people that now that they finally have people, they're not just going to turn around and lay them off. They're not going to do that because then they're worried if they lay them off, they won't be able to get anyone to replace them ever. And that's kind of the story of the year, is that once people get workers, they want to do everything they can to keep them, which means higher wages, better benefits. All these are inflationary things. When people get higher raises, they have more money, they spend more, demand goes up, inflation goes up with it. And that's a really shitty situation. That's why this situation is unprecedented, because COVID has never happened before. We never had to send everyone home for a year and then be like, hey, can you please come back to work? That'd be great. It just has never happened. So that's just a whole nother side of this debacle that we're in. So employers aren't wanting to lay people off because they're worried they will never come back. This isn't like in 2007. 2007, everyone was looking for jobs. Or 2008, everyone was looking for a job. Everyone lost their job. Everyone was trying to find a new job. White-collar workers were just getting hammered. Everyone was getting fired. No one was buying houses. No one was buying new cars. It was just a nightmare. But this time is different. People are still spending. We are quote unquote in a recession, but people are still spending. People are still not as at a rate like they were because mortgage rates have gone up, but people are still buying houses. Housing prices have barely even moved down that much. So it's just a very strange spot, and the Fed knows this. The Fed is like, God damn, this economy is so strong. We are doing everything we can to pull it down. We simply cannot. They are yanking on a rope trying to get inflation and unemployment to go up, inflation to go down, and that rope is just getting yanked apart, and it is like about to break. I mean, there's so much tension on each side of this rope, and they are playing the game of trying to not get this rope to break. But when you just keep yanking on one end of it and the other end is the rope seems fine, then they are just going to keep yanking and yanking and yanking until that rope snaps. And when the rope snaps, that's when you get high unemployment, you get a rug pull, you see capitulation, panic selling in the stock market, minus 10% day. And I think that's absolutely possible. I think looking forward, so right now, that's the other thing. The market does this. The market goes up because it's looking forward, because the market was going up in hopes that we were going to see another low CPI number. It was going up before it, and then when that CPI number came out, everyone sold the news. And then we had FOMC, and then it was like the market just sitting there. Well, now what do we look forward to? Now it looks forward to earnings. Oh God, earnings. The market's like, oh God, earnings are gonna be so bad. So that's what happened back here. That's what happened. is the market, it had earnings and then it was pushing up. I mean, Apple and all these companies had their earnings in like late October, I believe. Yeah, late October we come down, and then the market came up pretty nicely after that. Um, but now that's really what the market's looking forward to. Is like, oh man, we got freaking earnings coming up, and let's talk about that. Those earnings are not going to be good, folks. I've been saying this for a long time. These interest rates are they lag. They don't instantly take effect in the real economy. Um, Not for about 6 to 12 months. So with every quarter that goes by, the market is the actual economy, not the stock market. The stock market already feels the Fed funds rate, but the actual economy, every quarter that goes by, it feels those interest rates gradually more and more and more. So I expect this next earnings season to be bad. I mean, I don't think I can put it lightly, but I think they are going to be bad, very, very bad. Um, and that is going to be in late January. I think those earnings are just going to be very bad. So I could see a lot of selling into this next month a lot of tax loss selling to finish off this year. That's obviously what's happening. People are selling so they can take their losses and for tax purposes. But I think the market now is like, all right, we get it. Inflation's going down. That's old news. We pumped on that. Now that that old news is behind us, what else do we have to pump off of? Earnings. That's the next big thing. Well, oh god, those are gonna be bad. Those are gonna be terrible, right? And that's really what we're seeing now. We're seeing that selling, looking forward in the earnings, and man, it's tough. It's tough. Right now, I'll be completely transparent. I'm holding a Nvidia put it's a cheap. I only got one. I don't like to go heavy shorting stuff because anything can happen. The Fed could come out any day and say, hey, we're gonna cut rates. You never know. But right now, I'm short on Nvidia. I think semiconductors are going to have such a rough 2023 and absolutely abysmal 2023. I foresee for semiconductors. If you think this year was bad for semiconductors, you just wait until we see a full year of like 5 to 5.5% interest rates. Semiconductors are just going to get hammered. And I think the fact that Nvidia just completely FOMO'd rallied. I mean, look at this rally on Nvidia. It went from about 107 straight up. It went up like 73%, bro. I mean, just on nothing, on literally nothing. Like their outlook didn't get any better. It just like FOMO rally. People think, I missed the bomb on Nvidia. So I could see a measure move on Nvidia down to about 90 on the bottom of this falling wedge that we're in. We bounced off that 200-day moving average. We've broken the downtrend, or the uptrend, I should say. I think Nvidia to the downside is a very, very good play from here. Very low risk, high reward kind of setup. I think it's just way overextended. This rally was just stupid on Nvidia, just stupid. And they are a very consumer exposed company. They're going to feel the pain. So that's what I'm seeing in stocks. Looking at the Nasdaq. Nasdaq is going to fill that gap. I mean, Jesus Christ. This gap down here goes all the way to like 264. I think tomorrow we'll see a green day. I mean, 5 days of selling. We have to see a green day eventually. I think we'll see a nice little bump up. We could pump up here to 273 on the Nasdaq. But any pump from here is a fake. We're gonna see lots of fake pumps from here up until maybe the second quarter of next year, but we're going to see a fake pump. And the S&P still hasn't filled that gap. So I just see downside, honestly. I can't look anywhere and say I see anything that looks good to the upside. If you look at Microsoft it really looks like it wants to go down right now. I mean, it is falling out of this rising wedge. It's broken its uptrend. It bounced right off that 200-day moving average like I told you guys to watch out for. I said, look at Microsoft. It did it back here in August. It bounced right off of that. And what did it do again? It bounced right off of it again. And then the second it does, crazy high volume selling. Sell, sell, sell. Sell now, ask questions later. So that's why I ask, please subscribe so you don't miss these. I try to upload daily. I think I give a good insight. Sometimes I'm right, sometimes I'm wrong. But I think I've been pretty decent about this time. Anyways, let's talk about when are we ever going to see a Fed pivot? I just want to talk about that a little bit. Do a little CPI US. Where do we have that? go? U.S. CPI year over year. So, what's the Fed been trying to avoid? They're trying to avoid the 80s and early 70s. Here we go. Just looking at this, this is the worst inflation that we had as a country. I mean, this was crazy. From 72, at least since they started keeping data back here in the late 60s, we saw inflation go from like 2% and then straight up to about 11% over the span of like 2 years. I mean, this was pain. This was pain, I'm telling you right now. This was not a good time to be in the stock market. So we saw that crazy inflation, and we saw the Fed get hyper aggressive, very, 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 very aggressive. Back here, yeah, inflation was still high back here too. But then they dropped rates. So 72 rates are pretty low at 3.5%. They dropped them too much. We saw inflation skyrocket. So they raised rates to where the CPI was. CPI was almost at about 12%. They go to about 13%. Inflation comes down. Boom, we come down, drop rates. And then what happens? Oh, we get a nice few years here. You know, the mid 70s was a good time. And then what happens? Oh, God, no. 1978, inflation's back. So what's the Fed do? Well, they skyrocket rates. They go straight to 17.6%. Think about that. Think what the stock market would do today if the Fed did anything even close to that. Just try to think about that. Like, the market shits its brains out on a 75 basis point hike. They were doing like 300 basis point hikes back here. So they rug pulled it. They wrapped those rates straight up, and inflation came down. So what do? Oh, let's drop rates. They cut rates in half. They axe those rates. They drop them back down. And now, mind you, this was a very painful time for the U.S. economy. Super duper painful. Unemployment was so high back in the 80s. I mean, things were bad. This was a very bad time to be in the stock market, to be trying to buy a house, raise a family. I mean, things were cheap back then, but you could not find a job to save your life. Things were bad. So they drop rates. Inflation comes down. They drop rates. Oh no, it's coming back up. So what do again? They jack rates back straight up to 19%. And now the amount of pain that causes to the economy when you're ripping rates up, you're doubling them, you cut them in half, doubling them. This was a terrible, terrible time to be in the stock market, to be in the economy, like I said before. The Fed is doing everything they can to avoid this, because this was just a nightmare. I mean, a nightmare. They were getting inflation, it'd come down, and then, oh no, it ticked back up, everyone freak out. Oh God, here we go again, rip them back up. It's just a nightmare. Today's Fed is doing everything they can to avoid that. And I think the market was overestimating how dovish they were going to be. I think the market was praying to God they were going to come out of this FOMC and be like, hey guys, we're thinking about cutting rates by like halfway through next year. And they did not say that. They said, we're not done tightening. We are going to keep tightening, and we are going to leave those rates high. And then they said their reasoning for that is because the economy's handling it. Like, unemployment's hardly even moving. They talked about the labor market. No one's getting laid off. Tech companies are laying their people off, but that's because they had free money everywhere for 15 years. Those people are getting laid off, but like, you go to a construction company, you go to a blue-collar worker, factories, Amazon factories, all these places, they're begging people to come to work. They are not laying people off. So that's why the Fed is like, we got green light to just keep tightening, to just keep going, because this labor market's so strong, the economy's so strong, we're just going to keep doing that. And look at this. I mean, this is kind of eerie. We are like right about to be at this 5.5% spot that we were back here in 2006 and 2007. And then what happened? Oh God, 2008. So it's weird, because then you look at the chart of the SP 500 on top of 2008, and they're like identical right now. It's really scaring me. So that is kind of where I'm at with the Fed. That's why you just got to look at the facts. I mean, these are tradable rallies, very tradable. This was a super tradable rally that we had back here in in October, when we had that CPI number. You know, you saw that crazy green bar, and then we got some selling, but then we got that rally. Like, you can make money off of these rallies. These are huge moves on the S&P 500. But I'm telling you, you got to take your money off the table when we get to a certain point. And I've been saying that about the VIX. I've been saying once we get up to the 30s, 34, 35, you start buying. Once you get down to the teens, like 19, 18 on VIX, you sell, you take your profits, because that's just been the story of the year. We come up 35, we drop down 18, we come up 35, drop down 18, 35. gotta just look at what the market's been doing. Don't fight the trend. Trend is your friend. And that's something I gotta talk about as well. Is what is going on with the VIX? The VIX has been very strange. We had another red day today with a almost -1% day on the S&P. Something weird is going on, folks. The fact that we were selling off so much, but the VIX has like hardly even moved. I mean, we've had 5 straight days of selling on the S&P 500, and look at what VIX is doing. It's going sideways. That is super scary to me because like how low is the market going to go if VIX shoots up to like 28 tomorrow? Like, what is going to cause the VIX to rise here? It's very very bizarre to me. It's like people aren't buying VIX futures anymore to like hedge themselves. It's very strange. Something worth watching. Anyways, that's all I got for you guys. Um, I really cannot uh, say this any more clearly that the stock market is the impatient getting their money taken by the patient. You have to be patient. This has only been a year. A year is not that long of a time in the stock market. It's been a year of pain, but you have to be patient. I'm telling you, things are going to go lower. We're going to see bad earnings, which means bad earnings per shares, which means valuations coming down. Things are just going to get cheaper. I cannot say that enough. And until the Fed pivots, until if we do get that day where the S&P drops 10%, where we see circuit breakers, the Fed can have emergency meetings at any point. They can come out the next day and be like, "All right, guys, we are going to cut rates to zero, stimulate, so on and so forth." When that happens, you buy. You buy. But until that happens, until we get that Fed that can finally come out and say, "It looks like we're done. It looks like our job is done. We're going to start lowering rates." That is when you start to buy. But just be patient, man. I mean, just be patient. It's going to be another year of pain next year. I don't think it's painful as this one, but it's not going to be great. So, woohoo, I know how cheery, right? But thanks for watching, folks. I appreciate it. And I'll talk to y'all later. Peace.